Across Nigeria, small business owners are opening their emails to find sudden tax queries and best of judgment assessments. It feels like an ambush. But these notices usually aren't catching intentional tax evasion. They are catching missing invoices, unrecorded cash, and a basic misunderstanding of what the law actually requires. With the transition to the new Nigeria Revenue Service, or NRS, the era of waiting years for a physical audit is over. Compliance is now a digital, continuous loop. Your business is being monitored right now. Today, we will fix that. We are going to walk through exactly how to build a defensive tax file, map out your mandatory filing timeline, and master the exact steps to handle a query before it turns into a dispute. Getting this right is the only way to protect your operating capital, secure bank loans, and avoid the kind of financial penalties that can shut a growing business down. Step 1 is building your defensive tax file. During a review, the authority does not care about your verbal explanations. They only care about evidence. The foundation of this file requires 3 things: sequentially numbered sales invoices, copies of every receipt you issue to customers, and contracts from your vendors. Next, maintain a daily cash book, monthly business bank statements, clear PAYE payroll records for staff, and a register of your fixed assets, like computers and delivery vehicles. This brings us to the single most dangerous administrative mistake a founder can make: running business transactions through a personal bank account. When personal and business funds mix, it becomes impossible to prove which expenses were strictly for the business. This automatically triggers audit scrutiny and gives the authority grounds to reject your expense claims entirely. Verifiable written evidence is the only currency the NRS accepts. If an expense is not documented in this file, legally, it did not happen. Now that the records are organized, we have to look at the timeline for submitting them. Every single month, without exception, you need to reconcile your bank statements, record all sales, and file your VAT and PAYE returns. You also must file withholding tax returns. This creates an independent paper trail of third-party payments, which the system actively tracks. Once your monthly rhythm is set, the annual requirements become much easier. At the end of your financial year, you will prepare formal financial statements and file your company income tax return. Successfully completing this full annual cycle is the strict prerequisite for securing your tax clearance certificate, which you need for government contracts and corporate loans. Maintaining this rhythm prevents the administrative backlog that causes late filings and attracts massive compounding penalties. The NRS no longer relies on an inspector knocking on your door. They operate a digital network, pulling data from across government and financial sectors. For example, your import records at the port or commercial bank transfers can directly contradict the revenue you declared on your tax returns. The system also watches your filing behavior, repeatedly filing late, constantly amending past returns, or submitting nil returns while operating are all instant red flags. Then there are the financial tripwires. A sudden, unexplained drop in your reported turnover, or buying expensive company vehicles during a year you claimed a massive loss will stand out. When you trip one of these wires, the system automatically generates an administrative query. This happens before a human auditor is even assigned to your file. A tax investigation is rarely a surprise attack. It is the mathematical result of data mismatches and ignored digital warnings. If you do receive an NRS query letter, do not panic. This is simply a formal request for clarification. It is not a criminal conviction. Handling a query starts in the before phase. This means updating your defensive tax file and checking the Tax Pro Max portal to catch every digital notice. In the during phase, note the strict legal deadline on the letter, gather the exact invoices or bank records requested, and write a concise, factual response. Do not use emotional language or offer unverified guesses. For the after phase, ensure you get proof of submission, track the correspondence, and wait for the authority to formally resolve the issue. However, there is a clear breaking point. If the authority issues a best of judgment assessment, or if the inquiry spans multiple tax years, the situation has escalated. At this point, you must stop any do-it-yourself efforts. Seek immediate help from a qualified tax practitioner or a chartered accountant to handle the defense. Above all, silence is the most expensive mistake you can make. Responding promptly with hard evidence is the most effective way to stop a routine query from becoming a full-scale field audit. By keeping daily records and hitting your monthly filing deadlines, you take a looming legal threat and reduce it to a simple, predictable administrative habit. Strong, consistent documentation and taking early action are your absolute strongest shields against avoidable financial penalties and tax disputes. Please note, this video is for educational purposes only. It does not constitute legal, accounting, or professional tax advice. Tax laws and administrative practices change frequently. You should always consult a certified professional regarding your specific business circumstances. Surviving a tax audit doesn't require outsmarting the government. It simply requires being prepared for the questions they are guaranteed to ask.